Hello and welcome everyone to the week ahead commodity report for the 6th to the 10th of August 2018, presented by myself, Phil Carr, at the Gold and Silver Club. So today we'll be looking at the precious metals and also crude oil into the close on Friday. Gold has closed at $1,213, silver closed at $15.32, and platinum closed at $827 US. And the big news on Friday, of course, was the US data of non-farm payrolls, which showed that US job growth slowed more than expected over the month of July. As a result, we saw gold break out to the upside over a 1% move priced against the US dollar, although gold priced against several other currencies broke out to 1-week highs, which we'll show you very shortly on the charts. That was after gold had broken down prior to non-farm payrolls to 17-month lows. So we have certainly seen over the last few days gold prices under pressure. So what can we expect now as we go into next week? Is it the time to buy gold and silver now, or can we expect further price declines as we go into next week? So we'll have a look at the charts and we'll talk you through that in a little bit more detail. Another point to bear in mind as we go into next week is that speculators have raised their net sell short position in COMEX gold. So hedge funds and money managers have increased their bearish positions over the last week in gold contracts to another record week here. So that could have an impact on gold prices going into next week. But if we do get follow through and a breakout to the upside, we could also see short covering and a very explosive move. Let's move over to the charts. So first of all, we have gold priced in US dollars here, which into the close on Friday closed at $1,213 per ounce. That's after it broke out to $1,220 US dollars after the non-farm payroll data. Quite a straightforward breakout trade after the non-farm payrolls. We saw the US dollar sell off and it gave us an opportunity to go long on gold and just capitalize on a breakout during the US session in the afternoon. What was quite interesting too was the price action that we were seeing not only on gold priced in US dollars, we were seeing a breakout here in gold priced in a number of other currencies as well. So if we have a look here, we've got gold priced in euros, which broke out to 1-week highs. We look like we're basing now on gold priced in euros, where we had the low which was put in at the end of July. Also got gold priced in New Zealand dollars here as well, which broke out to 1-week highs, and you can see it didn't form a lower low on Friday. It's starting to base, and we are at a point where we could start to see it consolidate and potentially gain some momentum going into next week. With gold versus the US dollar closing at $1,213 US dollars per ounce on Friday, gold versus the US dollar is now down -7% since the beginning of the year. So it's just worth bearing that in mind. And at the peak of gold prices over 2018, gold rallied up to $1,365 US dollars per ounce. So it's going to be really interesting going into next week to see whether this move does follow through or whether we're going to see the price roll over again, break below $1,200, and whether we need to see lower prices before the bottom of gold gets put in. A good indicator to get a sense of when gold and silver could turn is the gold to silver ratio. Okay, so we discussed this last week on the metals report, where the gold to silver ratio, typically when it gets to 80-1 or higher, represents a good time to be looking to buy silver especially. So we did see a breakdown on Friday below 2-week lows on the gold to silver ratio, and this was after we recently revisited 80-1, and since then the gold to silver ratio has been selling off. So it's now at 78.46 into the close, and if we keep seeing the gold to silver ratio break down next week, the expectation would be that silver will outperform gold. We should see this ratio continue to drop and we would see a reversion to the mean. So effectively we should see silver prices gain more significantly in percentage terms than gold. So with that, if we have a look at silver prices, silver was actually up into the close on Friday, just over 0.5% on the day. It did initially break out after non-farm payrolls, and we can see here as we go over to the silver chart, we broke out to about 3-day highs. We've retraced into the close, but we've still got a higher high there and also a higher close as well. So it could still springboard higher. It has been consolidating now for a couple of weeks now. We're just still staying with within a range right now with silver. So it's trading above $15, but it's been unable to break and close above $15.50. Now moving over to platinum. Platinum actually had the biggest move on Friday. Immediately after the non-farm payrolls, it broke out over 2% on the day, broke out to $840. You have to remember with platinum, over the month of July, platinum broke down to 10-year lows. It broke back below $800 per ounce. It then got a bid at that level, broke and closed back above $800. So only spent a very brief amount of time just below that $800 level. And since then, we have been getting some support here for platinum price. And I'll be looking at this to see whether next week we will get a break and a close back above the $850 level. Will be quite important for platinum here. So you can see where it has managed to build a bit of momentum following on from the non-farm payrolls data on Friday. It was the strongest mover straight after non-farm payrolls with a 2% move to the upside, and we'll be watching this for correlation too. We are at the resistance zone though as well, so it is also vulnerable if it was to break back below the weekly lows to move back towards the $800 level. That has been well supported so far, but another revisit towards that level, I would be interested to see how the price structure does hold up at that zone. On the flip side of that, if it breaks and closes above the $850 level, it would suggest the low could be in, and from a risk reward point of view, there is quite a lot of upside potential for a longer term position here on platinum as we go into a seasonal time of year over August and September, where normally the metals do perform well. Now moving over to the US dollar, this will also be important as we go into next week. We have had another retest back at the 95 zone, which again has been met by resistance. So really at the moment we continue to consolidate. It is moving between approximately the 94 zone up to the 95 level. We're at resistance right now. We have a doji and indecision candle which has formed on Friday. So it will be decision time as we go into next week as to whether the US dollar will then sell off and roll over, which can provide support for commodities, or whether the US dollar is able to break above the 95 level and get a close above a lot of this resistance that we've got at the 11-month high. So we'll be watching out for the dollar here for the inverse correlation. So generally a breakout on the US dollar and dollar strength would be negative for commodities priced in US dollars. However, if the dollar sells off next week and we see the dollar weaken after the non-farm payrolls from Friday, that could provide support for commodities and you could start to see them gather some momentum to the upside if the US dollar does sell off next week. Okay, so just have that on the watch list going into next week as well. Moving over to crude oil, we have seen a reduction again here from hedge funds and money managers cutting their bullish net long positions in crude oil for another week here. More downside on oil on Wednesday as we got closer to the end of the session after we saw comments from the White House regarding additional trade tariffs which were being proposed on China, which tends to have a negative impact on certainly crude oil, on commodity currencies. Often copper will sell off as a result as well. Australian dollar, US dollar, New Zealand dollar, US dollar, oil prices, quite a few commodities tend to get impacted. We have a look at the oil chart here. Right now, WTI crude oil is quite range bound. So essentially it's moving between the ranges of $67 per barrel up to $70 per barrel. We are still staying within that range. At the beginning of last week, we had a breakout back towards $70 per barrel. And then later in the week, we came back down to support at $67. So we want to see really a little bit more clarity here as to whether we are going to get a breakout clear above a lot of this resistance, which could then lead the price action back towards a $74 to $75 level, which would likely provide a good trading opportunity to go long. On the flip side of that, if oil was to roll over, break back below support here at $67 per barrel, there's not much support for oil prices until we come back down to approximately $63 per barrel, which is the swing lows from June. Another point to note on oil as we go into next week is this underlying trend channel, which has been in play here since November, and you can see where overall oil does remain within an upward trend. So just be very careful if you're looking to short oil that you're not selling it right into major support. You can also see here very clearly where we have overhead resistance on the chart as well. We do have a pennant formation at the moment on oil and a breakout to the upside above the upper end of that pennant, and certainly a close above that price structure could result also in a breakout trade opportunity for WTI crude oil. And of course, if you want to join us at the Gold and Silver Club and be part of a community of successful traders, then join us on our live trading room program. As a member, you get access to live trade alerts. These are delivered via WhatsApp, email, and SMS. You have access to mentorship, expert advice, in-depth market analysis and trusted insights so you know earlier how to act quicker and maximize on trade opportunities. For more information and details on how to join the service, please go to www.jointhelivetradingroom.com. The link is also below this report in the description. So just click on the link, make an application, and we will of course get in touch with you ASAP. Also, make sure you subscribe to our YouTube channel to be kept updated with the latest commodity reports.